亲爱的投资朋友，大家好，在这里呢，要跟各位分享 Bollinger 本尊来解说布林线的部分哈。那接下来这边下面有一个影音档，后面这个影音档呢是说明了 Bollinger 在2011年的8月19号，那么说这个地方低档开始要往上攻一波，那么实际上的状况非常准哈。那下面这一页呢是当时的时候 Bollinger 在这里的时候去做解说的时候，其实也就是在这个位置上哈。那后来这个地方这一波上涨了一波起来哈。那接下来后面这个影音档呢，要来帮各位来说这个部分的东西。那么在播放影音档之前，先在这里跟各位讲感谢收看，待会儿紧接着就是影音档的说明的部分，谢谢。
Trade that way. Typically, we make what are called W bottoms. That is, we come down, make a low, bounce, come back, and retest that low. And that's where we are now. We've made the low. We've had our bounce. Now we're pulling back to find out whether people really want to buy stocks at the levels of the prior low.
So using that W analogy, John, it would seem to indicate that we are at the second dip on that W and we are headed higher. Is that the correct interpretation?
Well, yeah, but we need to form the bottom first.
Okay.
So we come down, we've made a low, we bounced, we're selling off now. The key is that sometime in the next few days we'll try to make a low in the market and turn higher. If that second low occurs inside the lower Bollinger Band, the first low was outside of the lower Bollinger Band. That combination of a low outside, a very high volatility low outside the lower band, followed by a low inside the Bollinger Band, has very good forecasting potential for higher prices. But that's going to need to play out over the next 3 or 4 days. We're just starting to enter into that setup now.
Hey, John, everybody seems to be talking about, we're going to retest that lows, and everybody's looking for those lows to hold. What happens if they don't? Do your Bollinger Bands give kind of a target on where the market could go if it doesn't hold?
Well, that's why we look at the low in relation to the bands, not in relation to the prior low. Because often you get that. You come down and you undercut the old low. Everybody panics. There's a huge regurgitation of stocks that occurs, a very high volume, very high volatility day. But if you look in relation to the Bollinger Bands, that second low is not beneath the lower band. So it's not a new relative low. It's a new absolute low, but it's not a new low relative to the Bollinger Bands. So that's what we look for, and that's the possibility that's building up here. If it fails, of course, then you do some classic chart and go back and look at some prior support levels that make sense and see whether investors want to buy stocks there.
John, for context, you're talking about the recent low of a week or so ago, not the March 09 low, right?
Correct. I'm talking about the low from 6-7 trading sessions ago.
John, let's talk specifics in terms of sectors and asset classes. Financials, you say, will be a great opportunity in the next 3 to 5 years. Based on the charts, why?
Well, if you look, these things are very low historically. They're very low in terms of short histories. They're very low in terms of long histories. So it suggests that we start to take a look at them. But, I know a lot of people are talking about buying into the banks now, buying into the financials right now. I think it's a bit early yet. I think you want to see them stop going down, bounce a bit, probably build a base while people figure out that their perceptions of these companies going forward were too dark. And then when they start to turn up again, that's the time that you should buy them. And I think the entire financial sector and many of the companies, individual companies, some of you've talked about it on the show today, like BAC, will in fact present those opportunities, and there'll be very long-term positive buying opportunities. But we're not there yet. Again, we're just starting to set that up.
And just quickly, John, you say treasuries will be a great short opportunity. At what levels? I mean, what are you waiting for in terms of putting on that short?
I think that, this is a kind of widows and orphans short. It's a short that you'll be able to play for a couple of years. We're making historical low yield levels on treasuries, 5 and 10 and 20 year, at a time when inflation is accelerating. I think inflation is going to continue to accelerate. Yields in the 1.5 to 2.5 range across the maturity will become yields, normal yields, like 5 or 6 a couple of years out. So that'll be a huge opportunity for investors to take the short side of a trade. I know most people aren't comfortable playing the short side of the market, but here's an opportunity that will develop. We want to, again, wait